Good evening, TikTok. It's Void Sniper, and I've decided to finally put a voice to the name. I wanted to create some online content for you all, which hopefully you can use for your own studying and your own benefit. Now, before I delve any further into this, all of this content, everything that I have learnt has come from ICT himself. Okay, now you are welcome to go and study his previous lecture series, previous videos, and in fact, I would urge you all to do that. I am merely sharing my experience with trading his concepts. Okay, so let's walk through today, Friday the 19th of September. So let's start off right here, okay, 7 a.m. What have we got during pre-market? Sell-side liquidity, equal lows, all the way up, relatively equal lows here, okay, right there. So what you want to see is this little volume imbalance here, right here at 735 get ticked, okay. That is where you want to see, okay. And you look at this, we've pumped the market up from 7 a.m, okay, to drive away to create a slightly larger opening range gap, which is portrayed with this red box here. Now, the opening range gap for your studying is the difference between the previous day's 414 closing price to the 930 opening price the following day. And this gap is an inefficiency. So make of that what you will. Gaps tend to rebalance, trade back to them, offering both buy side and sell side delivery within this gap. Okay, but we can move on from that. So let's fast forward this right to 9:30 a.m. today. This is market open for New York. Now, as you can see, we have come down. We've driven down. What's that? 30, 40 points. And what have we failed to do here? We've failed to take these relatively equal lows. Now, one of the most important things in your trading journey is understanding the context behind your trades and behind what the market is doing. Now, as you can see, we are approaching all-time highs, which are marked out by this little grey line up here. Okay, so for us to come up and trade past these pre-market relatively equal lows are imperative to doing that. So once we've traded back up here, this is telling me, why would they leave these pre-market lows intact if we're going to move higher? Well, there's a short answer there for you guys. They wouldn't. Now, once we get here, you can see we just tick just over that previous level. 2 ticks, okay? So straight away, I'm looking, once this has happened, I'm watching this down here. For me, this is a target. Now, it's already spoiled over to the right-hand side, but we don't want to look at that. What we want to look for here, straight away, let's take it up a time frame. Let's make it the vision a little bit clearer. So as we see this candle here, this 950 candle within the macro has swept liquidity. Now, the most important thing is this 955 candle here. So as you can see, we have traded up past the close of this 950 candle, which has swept liquidity. We've traded up past the close of that, and then traded prices come back down to close here. Okay, so in a short scenario, what we want to do is get our fib out, and we want to delineate this premium wick. Okay, now tell me, folks, random, huh? Completely random. Just look at the accuracy. But now let's delve down back into the 1 minute chart, because this is important. Now, as you can see straight away, you could have had an entry here. You could have shorted right here. But for me, I had zero intention of doing that right there, because we are at all-time highs. You don't necessarily want to be shorting all-time highs, because you can expect higher highs to be created. So what I saw was we've got a fair value gap coming down here, which it's not traded through aggressively. Yes, we have inversed it on this 10:06 candle, but this right here, this choppiness, and if you refer back to these pre-market relatively equal lows, you see the context. Now, if they wanted to push price higher and continue, we would have seen that here. And there's a reason that they don't. Now, one of the main reasons for that, okay, I'll leave this with you, is because it's a Friday. Now, look at the weekly charts. What do you not see on those Friday candles? That can be your homework. Okay, so going back to my entry in particular. So once we've got this 10:09 fair value gap going through this little volume imbalance here, for me, I want to see this being reclaimed. Okay, so once we've opened up higher here, for me, I was straight in. I've taken my position right about, hang on, right about here. Okay, that was my position with my stops resting just above there. Okay, now where am I targeting? Initially, right down here, 735, where this second low of these relatively equal lows reside from the pre-market, which we have failed to take. Okay, now as you can see, this played out perfectly. Now I'm not going to sit here and tell you that I held this move, because I didn't. I got in there, and just for some more context, this 5-minute premium rejection block, which we spoke about earlier, it's a bit of a tongue twister. I'm still tape reading this. I don't feel 100% comfortable risking capital taking a position from this position just yet. Still tape reading, and I urge you guys to do the same. Focus on learning. Okay, so I took my position right here on the 10:11 candle. My stops up there, and I was targeting down here. Now, what do you see from this leg here? We come down, we come down, we come down. So for me, once we get this candle at 10:20, opening low, we come down, and where do we drive into? Right here. Random. Look at the accuracy of the bodies respecting that first presented fair value gap at 940. Now this is an important thing that I like to use. Let's get rid of Tuesday. Oh God, what am I doing? How do I... There we go. Let's just change that wording to Friday. Okay. So, as you can see, we'd held that and we'd tapped into the CE of this. So for me, by that point, my break even comes lower. Now, where do I want to come lower with this break even? Okay, that's a question that you may be asking. Okay, so for me, right here, 7.5, this fair value gap here. Now, why this fair value gap, you may ask? Well, you've got buy side imbalance, sell side inefficiency, or flip it the other way around, sell side inefficiency, buy side imbalance. You have a SIBI. Okay, so if we delineate this into, you know what? No, let's use the fib right here. If we delineate this, as you can see, the C, this upper quadrant of this level resides at 75.75. Okay, now for me, I do not want to see this price getting hit. I'm happy with the CE getting hit and respected, but I don't want to see this upper quadrant getting hit. Okay, so I move my stop loss to break even, stop loss down here, in profit. and made a profit on the day. Now I'm going to come and show you my executions right here. Okay, so you can see right there, as I said, 790.25, exited at 775.75, right there, as you can see. Now, what do I learn from this? Okay, we came back up, came back, tapped in there, swept a little bit more liquidity, left ourselves some more relatively equal highs, which later in the day we come to absolutely blow through, because by that point we have taken this pre-market liquidity here, we've taken these equal lows right here, we've taken these relatively equal lows right here. Okay, once they've been taken right there, look at that, folks, all the way back up in a form of one-way delivery. Like I've said, random, completely random. Now, make of this what you will. I could have held lower, but by this point right here, as I've said, let me remove some of this lipstick off the charts for you. Right here, I was no longer comfortable having my money at risk, because we are trading around all-time highs. So a higher high could have been anticipated, and it's about preserving that capital. As you can see, these were my positions today. You could have found entries elsewhere, whether it be off of this little area here, right in there. You could have found buys after this. Okay, now what have we got? Down close candle, 1134, traded below there and closed above. Okay, so with that being said, sensitivity right here, and you could even follow it up all the way. Make of it what you will, okay, but use your studying and just focus on this area here. Ignore all of this noise, because we're in and out of the markets by this point. Make of that what you will. Make of it what you will.